On that note, we have another question, actually a question quasi-statement. The question is, so why does BlackBerry launch its flagship product, the Torch, the first product on its brand new OS, the BlackBerry OS 6, solely on AT&T, a network that is having performance problems due to the extreme traffic generated from the Apple's iPhone? Well, I can surmise that AT&T might have cut BlackBerry a decent deal. They definitely did one initially with Apple, even though they consequently renegotiated that deal. But in doing so, they limit the potential sales of the BlackBerry Torch. The nation's largest cell phone provider, wireless provider, Verizon, who also throws the most marketing muscle behind the products that it's pushing, is obviously behind the Android device and the Android operating system. They actually have teamed up with Good Technologies, which is enterprise security enabling company that enables Androids as well as Apples and other non-BlackBerry products to work in an enterprise with enterprise level security, such as the ability to wipe the phone, encrypt, etc., etc. The fact that Verizon is putting marketing muscle behind this and most likely will be pushing it as a package sometime in the near future is not a positive for BlackBerry. And again, it shows where the Android operating system and the Apple iPhone is encroaching on BlackBerry's enterprise turf, but BlackBerry's not reciprocating. And they're actually losing market share on the consumer turf, and they're having to fight even harder for the enterprise turf. Now, BlackBerry still has a significant majority, but we all know how quickly technology changes in terms of market share. One can be misled by accounting earnings. BlackBerry is fundamentally a very strong company right now, fundamentally growing very strong accounting earnings quickly. That's from an accounting perspective, a purely accounting perspective. From a strategic and from an economic perspective, BlackBerry is doing well now, but its future is looking much, much more bleak. The strong growth that BlackBerry is experiencing is due to the even stronger growth of the growth of the smartphone market. That means that BlackBerry is actually lagging behind several rivals. If those rivals are able to turn up the juice even more, BlackBerry will lag even further. It is quite possible that BlackBerry will possibly register static growth or even negative growth very soon, or relatively soon. The aggression that its competitors are moving in. Well, I often involve myself in the comment section of various blogs and websites, simply become as social as possible. And there are quite a few people, entities, who've never heard of me. I'm the entrepreneurial investor, Reggie Middleton. I have a small team of analysts who work solely and directly for me, and basically we attempt to dig out the truth. I don't have any transactional clients, so I have no axe to grind. I have no biases. I don't have a mandate to go long or go short or to provide a certain return by the end of the quarter. I simply would like to make money. It doesn't always happen the way I would like it to, but in general we have a very strong track record. As for how we've done on the Research in Motion, which is the first pure play technology research target that we've done in quite some time, simply take a look at the chart. I don't give transaction advice, I don't give trading advice, I give purely fundamental advice and opinion. But I did give a heads up to my subscribers that it's time to take a close look at the actual valuation of Research in Motion, since the share price was falling and it was approaching or got near a breach. I can't remember exactly when. the base case valuation scenario that I had. Now, RIMM is a particularly special analysis case because what we did was we released not only several reports, but we released several models. We modeled market share for the handset makers, RIMM and its competitors. We modeled market share for the operating system, both RIMM's operating system and its competitors. And we also gave plug-and-play reduced feature set valuation model for research in motion itself. The reason we did it was because there's so many variables that come into play. A static discounted, DCF model or comps model really doesn't tell the whole story. And there's a lot more room for RIMM to either fall further or to grow more in terms of share price. So we definitely had our assumptions, and we populated the model with our assumptions, but we gave our subscribers the ability to plug and play and change a variety of many of the assumptions to see what the valuation, how the valuation would change using our own proprietary analytics, going through all of RIMM's assets, cash flows, etc. And to date, it looks like it's done very well. If any of my subscribers would have entered into bearish positions at about the time that I said I was turning bearish on it, and adhered to the valuations in both the base case and the plethora of optimistic and pessimistic cases using trailing stops, you definitely should have come in with a very high double-digit or triple-digit return. If you were using options, if you were using shorts, it's a different scenario. But all told, it's a profitable story thus far, and the research in motion story has yet to play out by far. Next up, we will be doing Apple Computer, which is very difficult, and Google, which is also very difficult. But we're doing a very, very comprehensive job. With Google, we're doing some of the parts because I think the sell side has totally missed the ball in terms of Google, its valuation, and its strategic promise. Please be sure to visit BoomBustBlog.com for more research, analysis, and opinion on the global and the mobile computing wars. Remember, we're the guys that forecasted the residential real estate crash, the commercial real estate bust, the fall of Bear Stearns, the fall of Lehman Brothers, the fall of GGP, Washington Mutual, Countrywide, Ambac Financial, MBIA, a plethora of other companies, roughly about 60 to 70. We also did several markets. We forecasted the coming pan-European sovereign debt crisis as far back as nearly 2 years ago, a year and a half ago, in full detail starting in January. The municipal bond crash, etc. We did the Doodoo 32. We saw the regional bank crunch coming. This is all months, if not a year ahead of time. Subscribers had the opportunity to profit well from it. Of course, not perfect. I had 3 down quarters in 2009, but since we've been publishing the blog from September 2007 to present, the research has been on point. It's even been on point throughout 2009, but 2009 saw a significant divergence from the fundamentals. I'm not a trader, at least I'm not a very good trader, shall I say. I don't trade for the sake of trading. I'm a fundamental investor, and I look at things from a arithmetical and economic perspective. Okay, and I definitely take the medium and longer term view, which is probably why I am bearish on RIMM, but I'm much more bullish on entities that may have a static share price for right now, because not everybody sees what I see. Okay, and hopefully what I see is actually there and correct, but time will tell. Okay, and I again urge everybody to come visit the blog and check out our track record. Adios, au revoir, goodbye.